Hi everyone, I'm Ching and welcome back to Dr. Wealth's channel. Today we are talking about a topic that many people will ask me. When do you sell a stock? So it's actually very simple. In order to know why you want to sell a stock, you need to know why did you buy it at the very beginning. Alright, so usually when I buy a stock is because it's a good stock, it will do well, it will give me a stock appreciation, the company will grow, the company will make more earnings. But when I sell it, it is because of the same fundamental reason of why I buy it. Because when the story changes, when the fundamental deteriorates, that is when I will sell it. And at the same time, if the fundamentals were to deteriorate, we should not price anchor on the initial price that you have bought it. For example, if you have bought it at $100, and of course you hope that the price would double or triple in the next 2 or 3 years to $200 or $300. But not all the time the stock or the company works in your favor. Maybe you made a mistake, or maybe because it's not your fault, it's just that the company has poor sales execution, or the CEO changes, or the management didn't do well, their products have become outdated, for example. And these are all fundamental reasons of why the stock deteriorates or why the stock didn't do well and the business goes down and make losses, for example. Alright, and that is when I sell the stock. So every quarter I'll look at the earnings, how much they are making, are they doing well. I'll keep up with the story, and I want to make sure that the original thesis of why I buy it is intact. And if there's some changes, that is when I will want to sell the stock. So the second reason why I would sell a stock is when I have found a company that has better prospects, that will grow even faster than the one that I'm holding. So basically, regardless of whether it's in profits or in losses, and these are all opportunity costs, right? I would want to sell the one that has poorer prospects and to allocate that one to better prospects. And the other reason of why you sell it is because you made a mistake. All right. When you research into the company, you thought it was good, but actually in the end it didn't turn out so. So if you have made a mistake, I will sell it regardless of what price it is. I will take the loss, or I may take some profits, and I will reallocate it to a company with a better prospects. So basically what you want to do is to sell the loser and buy the winner, right? So winners will only make you money and losers will not make you money, right? Because in the long term, if the company has a good track record of winning, most probably in the future they will continue to have a good track record of winning, provided that they are not disrupted by other companies. And also it's very important when you want to look at a company, you want to look at the corporate life cycle. Is it in their early stage growth? Are they in the startup growth? Are they in the high growth phase, or are they in a mature growth phase? All right. So for companies in the mature growth phase, it is a little bit more dangerous because they are already very mature, and they are almost at the cliff of going into a decline phase. So we want to keep watch on all these mature companies even more closely. So yesterday can be winners and tomorrow they can be losers. So if you find that the company fundamentals have deteriorated, you want to sell them also. And at the same time, if I have sold a stock, and after reading through it, I have found that this stock it turned out to be better actually, or it was a turnaround. The company made better business because of a new product or new management. All right, it is always okay to buy the stock back again. Regardless of the price, it can be at the higher price that you have sold, or it can be at the lower price that you have sold. So basically, if you are buying or selling a stock, right, the basic anchor is you don't want to price anchor on the stock. Means basically you have to forget what you did previously. All right. And the companies are always forward looking and investors are always forward looking, so that's why we have to be looking forward and not backwards. All right, everyone, if you have enjoyed the series, remember to click like and subscribe to our channel. Thank you.